Leslie Picker joins us right now with a look at some of the comments that have been made by the CEOs of the nation's largest banks. And Leslie, we've heard a lot of that the last week or so.
We certainly have, Becky. It's been a key topic of conversation with these CEOs. The risk of recession, a large overhang for the six biggest bank stocks for much of the year. But take a look at this. Take a look at what they've done throughout earnings. You can see their Bank of America up more than 15%, JP Morgan up more than 15%. This is largely due to beating expectations and higher guidance for net interest income, the loan-making profitability metric that has been boosted by higher interest rates. Investors are more focused on fundamentals these days because the CEOs at the major firms didn't really say much that would assuage their concerns about the broader economy. In fact, they were pretty much in agreement that while the consumer is strong now, there could, emphasis on could, be a recession by the middle of next year. Goldman's David Solomon said just here on Squawk Box yesterday, there's a good chance we could have a recession. Jane Fraser said on Citigroup's earnings call last week, we could well see a mild recession in the second half of 23. And of course, JP Morgan's Jamie Dimon reiterating his concerns about the risks from the war in Ukraine to inflation, which he said would, quote, would be likely to put the U.S. in some kind of recession 6 to 9 months from now. Now, those comments do stand in contrast to Bank of America's Brian Moynihan, who said he's not actually seeing factors that indicate a recession or slower spending. But regardless of what these CEOs think will happen, all six universal banks provisioned for more credit losses due to a combination of higher loan activity as well as a more dour economic outlook, guys.
Yeah, I mean, Leslie, they all sound pretty calm in how they're saying it. And I guess the depth of the recession is still kind of left unknown at this point. It depends on what the Fed does, how some things happen overseas, internationally, things that are out of our control. You know, a slowdown and a downturn is not great, but if it's not a deep recession, that's another story altogether.
That's right. And there are parts of the banking business where you would expect to see, if we were currently in a recession, some kind of reaction. So, for example, you'd see changes to spending patterns, you'd see changes to credit quality. But right now, what they are seeing is a dampening of confidence for CEOs. And that's why there's muted deal activity, very, very limited IPO activity. And so those are the types of businesses where it's kind of based on psychological expectations of a recession versus a current recession actually occurring.